Hi everyone, good evening. Welcome to tonight's webinar. My name is Ivy and I'll be your host tonight. So I would like to do a sound check. If you can hear me, please tick yes in the poll. I will launch a poll right now. Okay, if you can hear me, please click on the yes. Okay, I see a very good response. Thank you, everyone. Okay, so here we have a little disclaimer before we start. For whatever we share tonight is just for general information and educational purpose. So it does not constitute to any recommendation to buy or sell any investment products. And before I start off, I would like to share a little background about our company. So our company is called Phillip Capital Sendirian Berhad. We are incorporated in the year 1995. So our company has been around for close to roughly 30 years now. And we are a wholly owned subsidiary of Phillip Capital Holdings Sendirian Berhad. And some of you may know we are formerly known as Phillip Futures, but as we grew and expanded our service and offerings, we have since renamed ourselves as Phillip Capital. So apart from that, we are also trading participants of Bursa Malaysia derivatives, participant organization of Bursa Malaysia Securities Berhad, and we are also a holder of Capital Market Services License. That basically means we are legal and regulated brokers in Malaysia. So Phillip Capital have offices across Malaysia. Our mother company is actually from Singapore, but our HQ is based in KL. And we have a total of 11 branches across both East and West Malaysia. So if you're from any of the cities, you're welcome to drop by our branches and inquire about investment-related services. And for this slide shows the Bursa Excellence Awards that we have received for the past few years. And last year, we were very honored to be awarded as the first runner-up for the Best Retail Derivatives Trading Participant, as well as second runner-up for the Best Overall Derivatives Trading Participant. So Phillip Capital has a wide global network. We have offices in 15 countries as located here in the map. As such, we do offer an international client base. Yeah, and for futures trading, we provide products listed in a global exchange from the US, like the popular exchange CME, CBOT, COMEX, NYMEX. We also have exchanges from Europe, Japan, Hong Kong, Singapore, and also Malaysia. So with our global coverage, client can actually trade both local and foreign products within the same platform. So Phillip Capital is your one-stop solution for your trading. Okay, so now we have our products. We offer three main categories. The first one is futures, which includes diverse market like index future, agriculture, metal, energy, and interest rate futures. Next one, we have equities or stock. You can trade Malaysia shares, US shares, Hong Kong shares, Singapore and Australia shares with us. And for the last one is contract for difference, or also known as CFD, which is our topic for today. We offered local Bursa shares and also US shares CFDs. So if you want to trade the US shares index itself, like the Dow Jones, S&P 500, or also NASDAQ, we also offer the CFD at a very attractive rate. Okay, so why choose us as your broker? First, Phillip Capital is an award-winning broker. We are well established and also recognized in the market. So we also offer 24 hours broking and executional support. If you have issues regarding your trades and accounts, you can call in our dealing desks and we have the dealers ready to assist you. And the third one is we also provide advisory skills on what products you would like to trade or how you can get started. And we also send out latest market news to our clients on a daily basis, so you can be sure to get the latest updates. And as mentioned earlier, our clients can trade a wide array of products through our platform. And we also provide online account opening, which is very convenient for you to start. So apart from all those, we also provide free one-to-one coaching session. So if you like a more personalized coaching on futures trading, for example, or how to use the platform, we can always arrange appointment to guide you for free. And we also frequently conduct free seminars and webinars. And if you can also start trading by opening the account for free, as I mentioned earlier. And for the free one-to-one coaching session, it's actually more tailored for beginners who want some guidance on this topic, like how to start trading, know about the product knowledge, platform, and charting system. So if you're interested, we are more happy to assist you. And at Phillip Capital, we constantly provide educational resources for investors. You can check out our upcoming seminars and webinars by scanning this QR code, or you can visit our website at phillip.com.my to check out the schedule. We actually invite speakers from the industry to give markets update and insights, so it's a good learning opportunity, I would say. So do join us for our future event. So I will let you screenshot if you're interested to join our future seminars and webinars. I'll give you 3 seconds before I proceed. Okay, so we also conduct this weekly market calls. So you can join our research team on the market views and updates for newly published reports every Monday at 11:15 a.m. Or if you want to learn more on the technical analysis, like how to spot entries or exit entries, right, then this is for you. Our analysts will do the technical analysis on live counters every Monday at night at 8 p.m. So if you're interested to join, you may also screenshot this and I will proceed after 3 seconds. Okay, so this is our online account opening. So you can open your account for futures, stocks, and CFD with ease and convenience because you can just do it online in the comfort of your own home. So if you want to open an account, you can also take a screenshot and scan the QR code right here, and it will take you directly to the online application. Okay, so now onto the trading platform. The trading platform that we use for futures trading is called Phillip Nova. It's actually very user-friendly and simple to use. So we have mobile apps for iOS and Android devices for those who like to trade on the go. Our platform is equipped with a wide range of technical indicators, live charts, market depth, function, and you can get access to both local and foreign products. So if you're not our client yet and you want to try out our platform to see the interface, we also have a demo account for you to try out. This is for our stock trading. The platform that we use is called Poems Global. Our platform offers all-in-one stock watchlist, charting indicators, exchange top 30 movers, powerful stock analytics, and market depth. So this is the platform that is suitable for new and experienced investors. So the next platform that we use for CFD is called CFD Trader. The interface is also very user-friendly, and it also has live charts, price alert, live market prices mirroring, exchange, and advanced order type. Okay, so on to promotion. We are currently running a promotion called Trade and Earn with Phillip. So you can actually stand a chance to win exciting prizes like iPads, AirPods, Apple Watch, and also up to 1,800 ringgit of touch and go reload pin when you start to trade any of the products with us. And that includes all 3 products that I mentioned earlier, which are futures, stocks, and CFD. Of course, the more you trade, the chances of you winning the rewards are higher. So this promo will run until the end of the month. So if you're interested, you can also scan the QR code or you can take a screenshot and it will lead you directly to the app. So before we dive into our topic for tonight, let me introduce our speaker, Anwar. So Anwar is a dual licensed dealer at Phillip Capital Sendirian Berhad with years of experience in the financial industry, including treasury, stockbroking, and derivatives. He is also a holder of bachelor degree in investment management. His expertise lies in both fundamental and technical analysis and frequently analyzes the market to share his view with clients. With his experience in capital market, Anwar has accumulated a large database of technical information to analyze the market environment. So we are very honored to have him on board with us today. Do seize the opportunity to ask him any questions if you have regarding CFD by dropping your questions in the comment box and we will address them at the Q&A session later. So let us welcome Anwar. Anwar, I will pass the screen to you now.
Hi, hello. Can you guys hear me right now?
Yeah, we can hear you right now.
Okay, hold on, yeah. Right, can you see the screen I'm sharing right now? So,
Yeah, we can.
yeah. Okay. First of all, I need to thanks to Ivy for a very quick and really nice introduction to our own company, Philip Capital, all of our promotion or product right now. And today we will focus on CFD, what we call this contract for differences, which we will share how to utilize this instrument in your investment portfolio. How can you use CFD as another basket of your investment instead of putting everything in maybe stocks or maybe in futures? Why not explore another thing, what we call is CFD? This is quite a new product actually in Malaysia. I'm just saying. Okay, so most of the sorry, before that, let me introduce myself again. My name is Anwar. I'm one of the dealer in the Philip Capital, and as per introduction by Ivy just now, all of that is what I am. However, I'm still what we call a baby duck here in the Philip. Nice to meet you all, and I'm very honored for you guys for attending the webinar today. Thank you for spending your time. This is I know this is Friday, your weekends, but you guys are still committed to come to this webinar with the intention of learning what is CFD all about and everything. Thank you again. I will go on to this. Okay, let's start. Okay, first of all, as per what Ivy already talked about in the introduction, we have a disclaimer about this one. I don't think I will repeat this again, but just so you know, this sharing is only for general information. No buy call, no signal or everything it will be given here. You may heard some of the example of the maybe stocks or everything during this show, during this webinar, but that one is not a signal everything. I'm just sharing that for an example so that we can get the more clear picture about what I'm talking about today. Okay, since this is the CFD, as you can read, and we also mentioning this now, CFD may not be suitable for clients that whose investment objective is preservation or something. CFD is what we call a very aggressive product. If you did not think your investment style or objective in line with the CFD one, this is something that you need to think more carefully before you explore the CFD itself. Learn about it, and then only then, if you think you can cater the risk requirement in the CFD, we will like to. It's not we will like that, and that you only then you can explore the investing in CFD itself. Okay. First of all, let's do the introduction. What is CFD actually? What is this? Basically, the concept of CFD. CFD can be defined as a contract made between two parties, which is a buyer and seller. With simple term is buyer and seller to settle the difference between opening and closing prices of a certain financial product. When I say certain, there's a lot of underlying product that can be offered under CFD, but in Malaysia and in Philippines, we are only offering for stock, single stock, and index. Stock comprises of the local, which is Bursa, and our foreign stock, which is listed in the NYIC and Nasdaq. Okay, for CFD, since this is a contract to settle the differences of prices between and for the underlying product, it did not deliver any of the asset to the client or CFD investor. You did not own anything. However, you can enjoy the movement of the price, the fluctuation of the price and everything, so that when you close your position, whether it's long or short, you can enjoy the revenue based on the price change on the asset. So if this form of trading, what I said just now, I explained, just understand that you do not have the ownership of the underlying instrument, such as stock. If you buy a stock at the market, using a stock, using a stock platform, everything, yes, you will receive the we call the ownership of the stock. You can vote in everything. However, in CFD, that's not the case. So this is the important question. Why? Why should someone as you or anyone else in this matter should try to trade CFD? There's a few reasons for this, and the first one I think is one of the what we call the the best of not the best of the attraction of the CFD because it is a leverage product. It's a derivative product leveraging, and as you know, what is a leverage? Leverage in CFD trading will enable you to get full market exposure for a small initial deposit. For example, full market exposure is let's say lah, the rough figure is 1,000. In stock market, you need to pay around 1,000 to own the exposure of 1,000, but not in the derivative product lah. Is it like CFD, where you need to put only a small initial of deposit or outlays to own that kind of value. Only then you have sorry, have to excuse me. Okay, where was it? Okay, small initial deposit. This is leverage lah, yeah, in a sense. So let me show you the example here. This is a quick example one, a simple example one. Let's say in stock trading right now you want to buy 1,000 units of stock A in this case lah. So the buy price is 10,000, $10. So making your total initial investment for it is 10,000 ringgit. That's not the case for CFD one. You only need, in this case lah, for the initial investment for the stock A, we assume the stock A is an index listed product where the leverage we need is 10% of the total value of the stock one. Meaning here, same stock, but you only need to pay 10% of the total value. In this case, only 1,000, comparing to when you are using stock trading, only need to pay 10,000. However, due to this leveraging product, your exposure is actually quite big compared to the stock trading, where here every movement of the price will be amplified. Meaning like this, here in this example, as you can see, in the contract value, when you sell the price, when there's a stock A price reach the $11 level, the contract value is 11,000. Yes, same with the stock. However, the return on investment for your investment right now is double up, let's say 100%. In this slide, you can see like investment 100%. On stock trading, you can only gain 10%. However, please to understand that this is an example for when the movement of price is with you, not the case if the price is moved against you. So this is the risk of CFD that you need to take care of, need to understand. So far, everyone okay? Am I talking too slow or fast? Okay, it's okay.
Yeah, it's okay.
So this is the margin requirement by our company lah, CFD. As you can see here, for Malaysian share CFD, if the share is in the index, we need a minimum of 10%, and non-index share maybe 20%. Same as same is the same case for foreign share CFD, 10% for index, 20% for non-share index share. But if you invest in the indices of CFD, where we shares right now, one of it is Nasdaq, S&P as well. So one of it is S&P. The minimum margin requirement is 5%. Okay, the second reason why you should start exploring CFD is actually due to the long and short position. What does it mean? The appeal of CFD actually is that you can short sell without owning the underlying stock, meaning that you can take a short position comparing to stock market. Okay, when you invest in the stock via CFD on this CFD trading system, you can open a short position on the spot at a real-time tradable price by selling with the aim of profiting from the falling stock price. Okay, here if you the picture there is a simple example. If you're going short, yes, if the price goes up, it was against you, you need to close the position with buying a higher price than you experiencing a loss. Same, but vice versa is price movement is with you. When you are shopping, when the price is going down more, then you can cross the variation look lower price. Meaning the differential of the price there is your profit. Same goes for the if you are in long position. So this one I think is a very simple explanation one. Because in Malaysia, I believe when you are when we invest in the stock market, we cannot simply have a short position. Actually, we can't enter a short position for now. This is why you can go for CFD and maybe in the US and everything, but not in Malaysia. Later I will explain more about this. So the third reason is the risk management, meaning that the ability that you can go short give you the ability to hedge your stock position in your portfolio. It will reduce overall stock risk that you are exposed to by ensuring an opposite duration of your current stock position. Meaning, if currently you are holding, let's say, a foreign share, an Apple, let's say you are holding Apple shares, you are currently long on Apple, and then how do you protect yourself from the price going down and everything? You can go into CFD. You can short the Apple stocks so that your exposure will be minimized. That's what we call the purpose of risk management. We need to minimize our loss and maximizing our profit. So one of the way that you can minimize your loss is going the other side of the direction of the portfolio. Meaning like this, for just the example I give just now, you are going short when your portfolio is long. All right. Talking about CFD environment in Malaysia, Malaysia have a it's not a very, it's a bit of restriction when we are talking about CFD trading. One of it is, just so you know, CFD in Malaysia, any listed counter by, let's say, by our affiliate and everything, we cannot go short for the top one. Why? Because that's one of the rules placed by AC for us. We can go short for any stock in Malaysia. So CFD in Malaysia, like I said, for now, Malaysia only offering the stock and indices. So for the commodity and everything, we do not offer yet as of right now. We are hoping that one day we can also offer the CFD for commodities and everything. And the most important, this is one of the requirements as well. For CFD, you need to be a sophisticated investor to trade CFD. As you can see in the slide now, this is the requirement, or what we call the definition of sophisticated investor. This is on the retail side. So what is it? One of it is that your total net personal asset or net joint asset with your spouse must exceed 3 million ringgit. However, exclude the value of your individual primary residence, meaning your house actually this one, the first house. You need to exclude them. Maybe let's say your total joint asset currently is 3 million and everything, including the primary house that you are living in right now. That means you pass the mark of the sophisticated investor. Okay. Second, an individual whose gross annual income exceeds 300,000 ringgit, or if you join with his spouse or his or her spouse, it is exceeding 400,000 ringgit. Okay, I think you guys can look here. All right. Okay, trading CFD with the stock research in Malaysia. Actually, in Malaysia, we use a DMA model, DMA pricing model. What does it mean? Okay, DMA is basically a facility that allows CFD prices and liquidity to be identical to the underlying instrument in the exchange. Meaning, what you see when you see the prices in the market, let's say stock A is 1 ringgit, you will see also 1 ringgit in CFD DMA. But investor that enter into CFDs at the market price, this means that all order executed in real time, meaning no delays, no spread and everything. What you see on the exchange is what you can get on the exchange if you have decided to get this one. So this DMA creates an equal playing field between different market participants, making it possible for you to see the traders movement and everything, effectively gauge the market sentiment. So it's not only about what we call acting against price. Since CFD is what we call, we are trading using the market price movement. It's not totally the thing. Like you can have this DMA model where you can see, oh, maybe this stock have a lot of volume and everything, so you know what's going to happen there, what is the sentiment of this stock and everything. So this is the advantages of using DMA, CFD, DMA instead of this, using the pure CFD. So using DMA means there's no spread to pay because there's this trader charge on commission. That's it. For CFD, normal CFD, what you see in the platform, usually there's a spread you need to pay on the pay but this depends on the CFD provider. In this case, our side is Philip. So that's the differences between CFD and CFD DMA. The main differences that you need to know for this thing. So after we know why we should invest in CFD, you need to familiarize yourself actually what is the risk exposure in CFD trading. Okay, so this is a leverage product. You can say it's the first risk you need to know is the leverage risk. Okay, it means that client only have to put a fraction, like I said, a small initial outlay or deposit to get the full exposure of the underlying instrument. But for the gain and losses, you still can get the you need to experience the same profit or losses that happen here for the investment that you are holding, for the stock that you're holding. Okay. So what does leverage do? Leverage can amplify your gain or your loss. Meaning if it's a gain for you, yes, that's good. That's what we want. But if it's a loss, you must understand that your loss is amplified by the percentage of the margin you have, like I said, 10%, right? Yes, you are only investing for quick example, you are investing only $10,000 for the value of $100,000. Whatever movement in the for the price of this stock or everything, right, your exposure is actually for full $100,000 instead of $10,000. So yes, it amplifies your gains and amplify your loss at the same time. So this one, you need to think very carefully about this. Consider it what we call as another strategy in the investment. If you are okay, if you know what you are doing, it is right with your strategy, goes along with your strategy. This is the thing that you need to consider. The leverage risk. Okay. If it's against, if with you, yes, that's a good thing. If it's against you, you must know the loss also amplified, not just the gain. Both sides are amplified. So the counterparty risk. We're talking about the counterparty risk is right now the counterparty risk we can refer to one of it is you yourself, which is the clients and the CFD provider. Since CFD is an OTC leverage product traded on an off-exchange basis, off-exchange meaning that it wasn't as regulated as the stock market. Yeah. So it's subjected to a separate regulatory regime. So when the client trades the CFD contract, it is issued by a counterparty. In this case, the CFD provider, and there is no central clearing about this. This is between CFD provider and the client. So the client will be relying on the counterparty creditworthiness. This is the most important part, counterparty creditworthiness. In this case, CFD provider is us, which is Philip Capital. And as for the introduction did by Ivy just now, you know how creditworthiness is Philip. Comparing to the what we call the broker, that yes, of course, sometimes I believe you guys heard of other platform like, just for example, XM and everything, right? The foreign broker, and some of them, who knows if you, yes, maybe they are offering CFD as well, but the creditworthiness of this what we call other brokers, that is one thing you need to consider if anything happens to the CFD provider. Okay. So this is the counterparty risk. So you need counterparty risk. You must understand it lies when the CFD provider itself fail to meet a due payment obligation and CFD. Meaning that when you have a long position and you made a profit and the gains supposed to be credited in your account, you did not get the gain and everything. That's what we call about the counterparty risk. That's why I said just now the creditworthiness is very important when you are doing a CFD. Who's your counterparty? Who is the CFD provider in this case? Okay, liquidity risk. This one is CFD traded on as an LTC basis. It is simple, I think. It does not have a secondary market, meaning that you only trade it with CFD provider between investor and CFD provider. That is your counterparty, meaning there's no secondary market for this. You cannot suddenly go to the B investor and say, hey, I have this CFD, can I sell it to you? No, this is not the case. There's no transfer of everything. So currency risk also normal when you are investing in a foreign product. The profit and loss transaction are in foreign currency dominated, so the foreign exchange rate is your currency risk. Maybe it goes against you or maybe it goes with you. This is news that you need to take care of, know, and use for as advantages. So the market risk, okay, this is also normal. Fluctuation in underlying market can occur rapidly and adversely affect the value of a CFD. What does it mean? Meaning that every market, for example, right now the interest rates are very hot. We know that right now Fed's rate and everything, rate cut and everything next year is a very hot topic. That kind of economic indication, yes, normally will affect every investment, including the CFD. This is the thing that you need to consider as well. The currency risk, I apologize, I forgot to delete this one. This is a repetitive one. Okay, everybody clear so far? If you have some question, you can ask now or you can wait for our Q&A later. Right. We move to the next topic, the usage or the advantages of CFD. How do you utilize the CFD trading in your investment portfolio? This is the part that we the main point today for this webinar, that we know how actually we can use CFD in your investment strategies. Okay, the first is defensive short. What does it mean? This is one of the examples I just give to you guys just now. Okay, as per what you can see in the slide, right? You might own certain shares and everything, and you believe that in the long term, this share, these stocks or shares that you are holding right now would go up. The price will go up in the long term, based on the historical and everything. However, in the same time, you know as well that this stock will go down on the short term. So how do you protect yourself from the very short for the short-term duration? Yes, you can go for defensive stock short. You just protect yourself from the risk of a sharp plunge in the asset that you own. Then selling a CFD will protect you from the downside. As you can see, for example, in the example below, this is just an example. We are using the Apple as the example. Right now, you are holding 1,000 units of Apple with the price is estimated. This is just an example price, $195, meaning that you have a total value of $195,000 in Apple protected in shares. So yeah, you are holding this thing, and now you enter this thing on the second one that you know in the long term it will go up. However, at the same time, you know in the short term it might have a retracement or correction for a bit. So in this case, you enter the CFD Apple short 1,000 cent at the price of 195. So your value is also the same. However, the initial capital is different. This is due to Apple and a 10% margin, meaning that you only have to pay $19,500 to own about 1,000 unit of Apple. Right. In this case, let's say on the 8th of January next year, the price goes down as expected to 105, meaning that you have right now you are experiencing $10,000 loss or 5% of it. So how do you protect yourself from that? Maybe you need something that some reasons or whatever you call it that cause you to exit the position anyway. You have the CFD. So since you are shorting of the CFD paper, and now you are actually have a PNL also the same 10,000, but at a higher percentage against your initial capital, which is 51%, as you can see in the example. All right, we move to the next utilization, which is a gearing up. Okay, CFD trader have enough. Yes, this is why we said you need to learn a lot about CFD before involving yourself into CFD investing, CFD trading. So most of CFD should have enough experience of standard investing before they can open an account. The big reason for this question is that the margin trading made possible by CFDs allows people to gear up their investment by up to 20%, 20 times. So, okay. Affiliate capital as well will let you gear up between 5 to 10 times of the margin trading of 20% down to 10%, which is in the range there. Like I said, as per I shared earlier, what is the margin requirement for shares that listed in the indices or shares that are not listed in index. But however, on the indices itself, you can trade a more aggressive margin of 5%. While you remain when you trade CFD index, for example S&P, right, the margin for this product is only 5%. Example down there, as you can read as well. In other words, with the 5,000 of initial money at risk, you can reap the upside to the 35,000 to 50,000 worth of stocks. This is just if you are bullish about the stock or market but lack the initial capital, it may be tied up. And somewhere else you have an investment somewhere that you cannot liquidate easily and everything, then CFD will allow you to borrow money to invest for this one. Meaning you can pay 5,000 depending on your before the gearing up. For 5,000 you maybe can invest for 25,000 value of stocks or even 50% depending on which stock you take. Okay. The next utilization is due to the aggressive short. As we said, yes, this one I think I emphasized this during this webinar a lot of time. If you are an investor that thinking of safety first, preservation of your capital and everything, it is not it's not quite suitable one for you. So you can just actually easily share on in the what we call in CFD that you're thinking maybe that a particular share is vulnerable to specific bad news or economic indicator or something about the sentiment of the market, then you can short. Same goes for long. If you think if you think the market sentiment is very good on this stock, everything, just normally we will long. So with this, when what does it mean by aggressive? Because a very small dip of price movement, it will be amplified. Since this is a gearing investment or leverage and everything. That's why if you think you are this couple of everything very aggressive investor trading very aggressively, CFD would be suitable for you. With since this leverage product and everything with it's not very low, with a small amount of initial deposit out there, you can have a full exposure of the underlying instrument. It would be great for you to trade in CFD. Like one of it, like you can consider to trade in CFD. Like general hedge, this one is just a general hedging. If you have a portfolio here consisting of most of the, say here of Nasdaq with the index, Nasdaq index fund share, right? Then you can set the index itself in CFD to hedge your investment. And maybe in this case you are long on a lot of the shares that are in the recorded statement. And then you just can defensive short your CFD when selling the index. Right. The last one I think I will share about this utilization is dividends. As I said earlier, CFD, when you are trading a CFD, let's say for example, investing in stock Apple, like just now, and as the example is Apple. Remember that you do not have an Apple shares under you. You did not own anything. So what are they giving you? They are supposed to give you all the advantage of owning shares except for the dividend. This example, meaning that dividend you can also enjoy dividend. So if let's say the shares you have a goes on the dividend, you will be credited with the dividend. However, if you are on short position, you need to pay the dividend back to your counterparty. This is the thing that you must understand. But I say, I think most of us here know that when a company dividend is being given out, right, the price of the share of the dividend itself will be adjusted up or down, depending by the amount of dividend that you are entitled to. However, if you know which company that you think the dividend is very consistent year by year, quarter by quarter, and everything, you know the movement after the dividend is being paid and everything, right? You know that the adjusted price might be the same as the amount of dividend. However, certain company or some company that you have researched, yeah, I don't think all of the company will adjust it accordingly to the dividend. Some of them maybe, yeah, they have a good momentum. They will not fall back to the amount of dividend. So here actually you can take advantage of the dividend to earn the dividend itself. And then after that you can exit your position if you want, if that is your strategy. This is what we call about the dividends. Right. I think I'm finished with the slide and everything right now. So the Q&A, I think I will pass to Ivy back.
Okay, sure, but I'll take back the presenter first. One moment. Okay, thank you, Anwar, for the insightful sharing. So now we move on to our Q&A session. So the audience, you can drop in any questions that you have, and we will answer them. Okay, so we received a question from Mr. Lee. Mr. Lee is asking, are we able to short US stocks on your platform?
All right, Mr. Lee, thank you for the question. Yes, we are able to short US stock in the platform. Any stock that you saw in the platform, right, that we offer, you can short for CFD US, but not for the Apple Malaysian stock.
Okay, thank you, Anwar. So the second question is from Mr. Ting. She's asking, do you have any tips or advice for someone who is interested to trade CFD?
Okay, tips and advice. If you are really interested in trading CFD, I think I've mentioned this during my presentation just now. First of all, you need to know how CFD works. What is the regulation in the Malaysia itself? Because CFD is regulated by AC lah. How can it work in Malaysia? What kind of product you can invest in? What is the risk? Just now what I share is just a partial of it lah. So if you want to know about this more about CFD and everything, yes, first of all, feel free to explore. Actually, if you explore on our website, Affiliate Capital, we already explain some of it. We have risk disclosure and everything, so you know actually what are you entering into the CFD. So first tips, if you are okay, yeah, learn everything about CFD first, and then try to communicate with your, in this case, your opening account with us, try to communicate with our dealer. We will talk to you, we will discuss with you, maybe explain to you whatever it is happening in CFD, what can and what you cannot do and everything, how it works. Feel free to ask us after the webinar and everything.
Okay, so the third question is from Alvin. He asks, do I need a CDS account to trade CFD?
CDS account to trade CFD? Actually, no, I believe no, because CFD is not, CFD is not stock trading. It's a different derivative one, so you don't need a CDS on this.
Okay, so
But
will be the end. Sorry, Anand.
But if you are still interested to open a CDS account with us, feel free to contact our dealers lah. You maybe contact Ivy here. I think Ivy already shared everything, right? In the introduction one. Hopefully you sempat take the screenshot for this. Okay, Ivy.
Okay, thank you, Anwar. So that will be the end for our Q&A session. So I'd like to thank Anwar once again for the very informative sharing.
Yeah, thank you, Ivy. Thanks to you as well.
So for those of you who are keen to connect with us, you can find us on this platform. You just have to search for Phillip Capital Sendirian Berhad on our Facebook, YouTube, Telegram, and Instagram. We post a lot of updates there regarding our events, promotion, market news, and updates. So be sure to follow us and don't miss out on any of our updates. We also will upload our recorded videos on our YouTube channel, so make sure you check them out as well. And lastly, this is our branch's contact for you to reach out depending on where your location is. You can visit our branch or you can contact the branch nearest to you. You can also take a screenshot of this if you want to. If you have any inquiries, just free to call us up or drop us a message anytime. Okay, so with that, I think we have come to an end of our webinar. We appreciate everyone for your time, and thank you again to Anwar for sharing once again. And we hope we can see every one of you in the future events. So thank you and good night, everybody.
Okay, good night, everybody. Bye-bye.